So why don't we move on to the Microsoft story? What is the greatest company in the world? Probably Microsoft. If you look at Microsoft over the past year, 2 years, 5 years, 10 years, what do they sell? They basically license business process to every major company on earth. What's their hardware? No hardware dependency. They can swap out, the silicon. They don't have a difficult supply chain. Nobody can turn them off, and their customers are all very credit worthy, and they sell you 3-year enterprise licenses. And when it's time for you to buy their latest Teams or their latest whatever Microsoft product, they just add it to your enterprise agreement, and you agree to take it because you don't have a choice, right? And it's a well-run, super profitable, high-growth company. Whatever bad happens to them, they're just going to raise the prices to their existing customers and pass it through, and everybody will pay it. So that's Microsoft. I had the opportunity to present the case for Bitcoin to Microsoft about 4 months ago, or in December, and I made the following points. It was, to put this in perspective, it was a shareholder resolution, and the resolution says we think that Microsoft should investigate the feasibility of a Bitcoin treasury strategy. Right? That was the resolution. Do a research study on Bitcoin. And so there was a chance to present to the board of directors for 3 minutes, and I put this together. And what I said to them was, look, you don't want to miss the next wave. Digital capital is the next wave. The way you know it's the next wave is because it's growing 62% a year. It's going to grow past you in a bit. It's the most global, interesting asset in the world. Hundreds of millions of people are talking about it. The greatest digital transformation of the 21st century is the transformation of capital. You're supposed to be in the digital transformation business. This is the transformation of capital, right? Global wealth is spread across $900 trillion of assets. Bitcoin is $2 trillion. Most capital is divided between long-term capital. That's the store of value assets you just hold to keep your money. And then other assets held for utility. The building you need to work in, the warehouse, the working farm, the stock you're holding for dividends. When you see the world that way, what you realize is that risk factors are destroying the long-term capital, right? Your capital is being destroyed by taxes, by inflation, by tariffs, by insurance, by torts, culture shocks, regulation, antitrust. Every single 10K has got 30 pages of these disclosures in them. And so that long-term capital, it's transforming into digital capital because there's no fires in cyberspace. There's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no war in cyberspace. Why don't you just move your money someplace where some politician is not going to take it away from you, or some war isn't going to deprive you of it, or lightning's not going to strike it? Because at the end of the day, Bitcoin succeeds based on a simple premise. A bunch of smart people in the world would like to keep their money. Period. That's the idea, right? Who's buying it? The smart money. The smart money everywhere in the world is buying a digital network to keep their money. That's the idea. Digital capital is, it's better. A digital building is better than a physical building. Everything you hate about the building, that it's visible and the mayor can rent control it and weather can strike it, everything you hate about it goes away. And instead, the building becomes invisible, indestructible, immortal, and teleportable. Everything that makes it better, you add in. Everything you don't like, it goes away. Bitcoin is the immortal asset. It's the asset that lasts 1,000 years. You want to keep your money 10 years? You want to keep your money 3 years? You buy a crappy currency. You want to keep it 10 years? Buy a strong currency. You want to keep it 50 years? Buy some kind of company or equity and worry about it for 50 years, or buy some property. What if you want to keep your money 500 years? How do you do that? You can't do it with any conventional asset. You can do it with Bitcoin. Bitcoin is the longest lived capital asset in the history of the world. How many people want to be rich forever? Right? I mean, why wouldn't you want to be rich forever? Bitcoin represents economic immortality. It represents the quest to make my company live not a decade. The average life expectancy of a company, by the way, is like 10 to 15 years. If your kids died at age 12, right, you don't think that's a health problem? So what if I told you the reason your kids die at age 12 is they drink dirty water? And I said the solution is drink clean water and they'll live to age 90. Would you change? Right? The money is the fluid. It is, you're running on toxic capital and you want to live forever. You need clean money. So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. And it is the most powerful, secure computer network in the world. It's fitting in the 21st century. If you want to create a digital commodity, you put it on a computer network, you protect it with electricity, you protect it with computer power, and you spread it to everybody everywhere on Earth. That's what Bitcoin is. It is digital capital. Everything digital is better. Digital pictures are better. Digital relationships, digital messages, digital documents, digital videos. Digital is always better, right? You don't believe me? Ask Kodak, right? It's like digital is better, right? Ask Polaroid. Microsoft should be powered by digital capital. And Bitcoin is the highest performing uncorrelated asset. So you're going to hold something on your balance sheet that's not correlated to everything else. So let's look at the charts. Microsoft is up 18% a year for the past 5 years. Bitcoin is up 62%. What's the cost of capital? The cost of capital is the S&P 500. It's 14%. That's what you're judged against. How are bonds doing? They're down 5%. Now, what if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year. So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock. What happens if you, is there a way to go back here? Can you move the slide back? I guess got no back button. Okay. In any event, if Microsoft buys bonds, you're destroying 99.7% of your capital over 10 years, right? That's the problem. Bonds are toxic, but buying your own stock destroys 97% of your capital. So you're going to destroy 97% of your capital buying the stock of MSFT versus buying the Bitcoin. And if you want to outperform, you want to reverse the transaction. You put Bitcoin on the balance sheet. What's the secondary impact of capitalizing on bonds? Because that's what Microsoft does. It decapitalizes, it gets rid of all of its cash flow, and it uses bonds for short-term as its primary treasury asset. So the result is you reduce your options open interest by 98%. Compare the open interest in MSTR to the interest in Microsoft, 98% less. You reduce the liquidity in your stock by 99%. What they're doing is they're denurturing the company, right? But you're not realizing it. Who's losing? The people holding the equity are losing because the equity becomes much weaker collateral. If it's not volatile, then it's not as valuable to hold. And if it's not liquid, then it's not as good collateral to hold. And Bitcoin, of course, emerged as the alternative to bonds in 2024. That was the point at which the SEC endorsed the Bitcoin ETFs. That's the point at which you could see FASB fair value accounting was coming. That was kind of year zero. we're now in year one. There's three, if you define money as a liquid fungible asset, there's three monies that you can use to capitalize a company in this world today. There is Treasury bills, sovereign debt that is, but generally short-dated Treasury bills. There's gold, and there's Bitcoin. You've got 19th century money in gold. That was the best idea in the 19th century, gold. You've got 20th century money in treasuries and sovereign debt, and Bitcoin represents 21st century money, liquid fungible capital asset, alternative to bonds. And so you have a choice to make at Microsoft. You can cling to the past, which is conventional finance strategies. Use treasury bonds, do stock buybacks, dividend out your cash flow. Or you can embrace the future. You can take innovative financial strategies based on Bitcoin as a digital capital asset. The first choice is a regression. You're divesting yourself of $100 billion a year. You're increasing investor risk and you're slowing your own growth rate. The second choice is a progression. You're investing $100 billion a year in your enterprise. You're decreasing the risk. You're accelerating the growth. If you look over the last 5 years, Microsoft surrendered $200 billion of capital. They literally won it. How many companies on earth ever generated $200 billion in after-tax cash flow? Right? It's got to be one of the 10 greatest achievements ever. They won and they snatched defeat from the jaws of victory. They took the money and what did they do with it? Give it away. What are we really doing? Well, we're dividending it out. That's one way to get away, and we'll buy our stock back. That's another way to give it away. What happens when you do that? You amplify the risk factors in your own prospectus for your own shareholders. You're now facing these are actual risks that Microsoft publishes to the world. These are the risks that the world's greatest company takes. Every investor has to assume these risks if they want to use Microsoft stock as a long-term store of value. What Microsoft did was they made sure they had $200 billion less capital to deal with the risks, and they probably decreased their enterprise value dramatically. So you're actually levering the company on the future risk. How do you escape the vicious cycle? When you get that much risk, you know what you do? You put massive pressure on your employees. Then you put massive pressure on your customers. Then you force your customers to buy products for 3 years when they only want 1 year. You force them to buy everything when they only want some things. And you lever your competitors. They complain to the regulators and the politicians. You get sued. Everybody gets angry. Then you go and you engage in the political process. It's a very divisive, stressful dynamic. And if you were to sit in the boardroom of Microsoft and say, well, why do you have to force everyone to sign a 3-year contract or whatever, the answer is because we get a lot of risk. We're trying to strip the volatility off of the earnings forecast for 12 months from now. Well, Bitcoin is the asset without that counterparty risk. You want to get away from counterparty risk to competitors, countries, corporations, creditors, currencies, or cultures. You got to find something that's not exposed to any of them. And that's Bitcoin. So, if you could buy a $100 billion company growing 60% a year at 1 times revenue, and if it was more profitable than your own company, would you do it? Of course you would. What if you could do it every year? Forever, right? Bitcoin is the universal, perpetual, profitable merger partner. And I'll tell you, the conventional investment banker will tell you when you've lost hope in your business, you either do an LBO and you take yourself private, or you got to do a transformational acquisition. And they're pitching you on buying something at 5 times revenue or 10 times revenue that's not growing. I'm giving you something which is dirt cheap, 1 times revenue that's growing 30 to 60% a year, right? It doesn't get better than this. The great irony, it's the least risky corporate acquisition imaginable, and there's perception by the consensus that it's risky. So let's evaluate Microsoft's options, right? There is a Bitcoin 24 model. You can grab it from GitHub, pull it down. plug your own business into it. We plugged in the Microsoft business, we plugged in their cash flows, and then we actually put together a set of scenarios. We said, well, what if you just sweep your cash flows and a little bit of cash and some treasury into it? Or what if you actually eliminated the dividend and you bought Bitcoin instead of paying the dividend? What if you replaced the buyback of your stock with the buyback of Bitcoin? What if you actually took a little thin layer of debt, like 10% of all the Bitcoin you own, you put on debt? And then what's the payoff? And the answer is it adds anywhere from $155 to $584 a share to the company, right? That's the share price creation. By doing what? By taking less risk. I'm asking you to add anywhere from $1 trillion to $5 trillion to the enterprise value of the company and take less risk. And and all you have to do is stop giving away the money, stop surrendering the capital. See, most equities are based upon the future expectation of cash flows. If you look at Microsoft, 95% of the equity value is future expectations. Well, if you start to buy Bitcoin, the equity value is backed by a hard asset, and eventually 41% or more of the value of the company is based on a tangible asset. Rich people aren't rich because of a future expectation of cash flows. They're rich because they own assets, right? I would rather be invested in a rich company than be invested in a company that gives away all their money but promises to work ever harder and raise the prices on their customers ad infinitum, right? Think about it. It's not a good look. We work harder, we cut our costs, our customers pay more, so that we can support the stock. It's a road to serfdom in a way. And so Microsoft would prosper on a Bitcoin standard. You can see here, your ARR, goes from 10% growth rate to nearly 16%. You're increasing the growth of the company. You're decreasing value at risk. You're creating value. You're de-risking the entire equity. All you have to do is embrace a new capital idea. So do the right thing. It's good for your customers, good for your employees, good for your shareholders, good for the country, good for the world, good for your legacy. Adopt Bitcoin. That's my pitch to Microsoft. But what I would say is I didn't do all this work just for Microsoft. I did this work because everything I just showed you would be applicable to every other company on earth. Doesn't matter how big or small you are. It's the same exact message to 400 million companies. But for those of you who have followed me, there are 21 rules of Bitcoin. And I'm going to note rule number 11, Bitcoin insight is restricted to those with a need to know. You have to need to know this. So when this came up to a vote, 99% of all the shareholders of Microsoft voted against a proposal to invest or to study the feasibility of doing this. 99%. This is what I mean by consensus. And of course, why? And the answer is it's the most powerful company on earth, right? They don't need it. They don't need the money. You need the money, right? And that's the beauty of this entire thing. Microsoft didn't have a need to know. And so I end this with just one question for you. Does your company have a need to know? And what will be your Bitcoin story? Thank you.